So today I'm going to be sharing with you two companies that the Motley Fool analysts consider a buy in 2019 for dividend investors that they can hold for life. So first, let's start off by looking at a clip from the Motley Fool analyst where they reveal to you the two stocks they suggest that you can buy and hold for life in your dividend investing portfolio. Before we get into that video, please be sure to subscribe to the channel, like this video, and comment below because it does help a YouTube channel like me get my videos discovered on YouTube. And as always, thank you for those of you who have supported this channel.
Everybody likes to look at Apple. I think Apple's really the darling of the tech world, so to speak. But man, has Microsoft just really made a resurgence. I mean, I have to say, I was a little bit skeptical many years ago, but to watch what's happened since Satya Nadella took over has been nothing short of remarkable. And what he's done there in building out just the cloud offering, really focusing on doubling down on what they do really well in enterprise software. This is just a company that makes a ton of cash on an annual basis. And like we were saying before, companies that make big amounts of free cash flow, they've got to do something with that cash. Oftentimes it comes in the form of dividends, raising dividends, buying back shares. Microsoft is going to be a company, I think, where their software is going to continue to play a big role in our lives for many years to come. They are certainly developing cool new technology on the augmented reality front with HoloLens and all of those different types of things. I mean, just to put some numbers around that, they brought in about $40 billion in free cash flow last year. They're spitting that money back out to shareholders in the form of dividends and share repurchases. And I suspect over the coming years, we're going to continue to see that because while they're really big, I don't think it's reasonable to expect them to double over the course of the next 5 or even maybe 10 years, but they're going to keep on bringing in a lot of money and they're going to have to do something with it. And shareholders are going to benefit from that, I think.
Well, in timely news that Microsoft announcing today they're hiking their quarterly dividend by 11%.
I can neither confirm nor deny that had anything to do with my selection today, but it might have had something to do with my selection today.
Andy Cross, what about you?
So Jason, Microsoft, such an amazing company, a very large company, more than $1 trillion now market cap. I'm actually going to the other side. I'm going to a company called Houlihan Lokey, which is a $3 billion boutique investment bank. While it's small, its numbers are actually quite large. It's one of the largest investment banks that consults on mergers and acquisitions, bankruptcies and restructuring and corporate actions, and then advisory services as well. So it's a $3 billion company. It's only been public for a few years. They started paying a dividend when they went public in 2015. They've doubled that dividend over time. Now it pays a 31-cent quarterly dividend. And the stock's at about 46. The yield's about a little over 2.5%. So I like that. That's much higher when you think about where the 10-year Treasury note is today, and it's at 1.8 maybe. So you have a nice little difference there. It's an investment bank. Like I said, from a volume perspective, it's one of the largest. It actually contributes a lot of consulting work to these smaller firms in the mid-market space. But what I like about it is very profitable. They have returns on equity north of 20%. They have a very nice balance sheet. They have profit picture somewhere between 10 and 20%. And even during the financial crisis, Jason, you mentioned the big banks. Houlihan Lokey actually maintained their profitability and kept their operating margins above 10%. So when I think about the growth picture, they've been able to grow revenues 13% per year for the last 5 years, profits more than 20%. The payout ratio is below 50%. So when I add that all up, I see a smaller company being able to grow their dividend over time. The stock's not that expensive at 17 times earnings. So it's a much different picture. It's more volatile. Microsoft has a volatility beta of less than 1. Houlihan Lokey's is 30% higher than that. So it's a little bit more volatile, but I like the growth picture and the ability for the stock to grow because of the dividends.
It's like peanut butter and chocolate. Yeah, you put those two together, I think you got a pretty...
So when looking at the website Seeking Alpha and the dividend scorecard for Microsoft, the company is currently trading at $137.38. It has a dividend yield of 1.47%, an annual payout of $2.04 with a payout ratio of 44.28% and 5-year growth rate of 12.14%. Its recent dividend announcement is 51 cents, which is 11% increase from the prior 46-cent dividend it was paying. They declared this dividend on September 18th. The ex-dividend date is November 20th, 2019, and it will be paying out its new dividend increase on December 12th, 2019. Also, the company's board approved new share repurchase program to repurchase $40 billion in shares back to the company. So the second company recommended was Houlihan Lokey Inc. They've only been paying their dividends since November 3rd, 2015. They're currently trading at a price of $43.59 with a dividend yield of 2.73%, an annual payout of $1.24, a payout ratio of 44.79, and 3 years of dividend growth. The current payout price is 31 cents, which is an increase of 14.8%, which they increased their dividend in the month of May from 27 cents. So let me know in the comments what you guys think about these two dividend companies. If you're investing in these companies, and if not, would you consider investing in these companies, or why you don't consider these companies as a good dividend investment? Thank you for watching.